Hello and welcome to this week's weekly trade plan webinar. Now, this is week beginning 1st of April 2018, so you can almost think of it as an April Fool's weekly trade plan session. However, of course, we take what we do very, very seriously, and hopefully the last laugh will be on the markets. So my name's Tim and I'm more than happy to take you through this particular webinar. For those of you that are perhaps new to joining us, it's all about multi-time frame analysis. Obviously, the markets are closed over the weekends, so it's a good opportunity for us to allow us to take stock of what is happening to price action, and it can help us plan for the week ahead. So we'll be taking a technical look at weekly and monthly time frame charts and give us the opportunity to identify important highs and lows and genuine levels of support and resistance that we can use in the live trade room during the week. So as always, we'll be observing our main 15 liquid global markets in this webinar. So without further ado, let's start as we always do with our risk warning. Please make sure that you are aware of the risks involved in trading the financial markets. So I'll just give you a quick moment to catch up with that. So moving along then, we shall just explain a little bit about multi-time frame analysis. Excuse me. There's a couple of important aspects to multi-time frame analysis. Firstly, you can see more clearly what is happening and who is genuinely in control of each market. Obviously has an added benefit for those technically trading these markets. The larger the time frame, the more important the genuine level of support resistance becomes as well. That's important to take on board. It can also show you the levels where a market is likely to move towards. So we can certainly use it from a take profit perspective. And finally, it can assist with the identification of trend reversals. So not only can multi-time frame analysis be useful looking at bigger time frames, it can also be useful to identify what's going on in smaller time frames as well. Okay, so that's the intro. Let's get straight into these charts, and we'll start as we always do with the dollar index. So, I mean, as you can see, just visually, we're in this range-bound market. We're getting a little bit of a sell-off, followed by a bit of buying pressure over the last couple of trading days. The markets were very, very illiquid yesterday, which is Good Friday. So this is actually being recorded on a Saturday this weekend. So we're going to look to try and get these out to you as soon as we possibly can. However, you can clearly see that this market is moving sideways. So that's the first thing we need to sort of have a bit of an observation on in terms of if we're looking to trade this market, what can we expect? Well, we can expect this to continue until something significant changes. And by that, we mean above the 90.86 or below the 88.13. So if you trade within this range, then just be prepared, maybe reduce the risk, whatever the case may be. There's no problem trading within the range. Just be aware that you might experience some choppy and erratic price action. So on a weekly time frame, the levels remain the same. There's a significant downward pressure in this market, certainly in the last year and a quarter, and we're just taking a breather. But as you can see, this is quite a prolonged breather now over quite a number of weeks and months. So that's significant because a reversal to the upside or to the downside would generate a lot more, let's say, volatility around those levels. So that's the dollar index. So let's look at the euro dollar as well, and you can see it's in exactly the same position. So looking at a weekly chart, there's no need to spend much more time talking about this. We're still working with the 125.54 to the upside and the 1.2154 to the downside. Currently in this kind of range bound, really choppy, not great trading conditions, to be fair, regarding the euro dollar and many of the dollar pairs for that matter. So this is the pound dollar. Again, we are actually, for all intents and purposes, in this range bound situation. Looking at it on a weekly time frame, you can see the downward push. You can see the 3-week kind of pullback or continuation to the upside, followed by last week was a little bit of selling came into this particular market. So this remains to be seen. But again, until we get some really structural move either above the 1.4343 or below what is effectively the 1.3710 level, then we are in this range bound market for the short term. So moving on to the dollar yen. Again, the same kind of price action can be seen across the board, where we're still working with similar levels. Let's look at it on the weekly time frame. Now, the dollar was actually stronger against the yen over the course of this previous week just gone. You can see it bouncing off the lows. We failed to make a break below the 104.63. That's why these levels can become significant levels of support. And that's what's happened. Price has been supported off that level, and we've seen a little push higher. A little bit of a pullback, sort of a 1/3 pullback on this trade. So that's quite interesting on the weekly chart. You'd have to say the bias for now is still to the downside, but we will wait and see what happens to the US dollar, and we'll see what's happening across other asset classes as well. Again, very choppy price action. So we will, the only change that can be made with this is to work with a new high. We're happy with the low, so the high is the 107, the 107 level exactly. So I'll put this level in here. So it's the 107 on the nose, and these psychological round numbers are also sort of levels that some traders really focus on. So moving on to the dollar CAD, we're still operating within this range bound structure, and that's going to continue. For consistency purposes, we're going to just work with a very marginal new low of 28.13. So I'm just going to change that level in here, 28.13. So we've seen a 9 pip decrease in the weekly low, which for all intents and purposes is nothing of any substance. Okay, so the New Zealand dollar then, again, it's the same picture across the board. Nothing of major significance to really work with. No surprise really, being the Easter weekend as well, that we've seen a bit of a pause in price action. Many traders will take advantage of a long weekend. They won't necessarily want to be getting into significant trades of any size, so therefore liquidity comes out of the markets, and you get this sort of meandering price action. So what we will do is we'll work with just a marginally new low. So we'll work with the 71.52 to the downside. So 71.52. So we're only making very small sort of amendments to a lot of these markets. But as you can see, the overriding prevailing market conditions are very much sideways moving markets. So the Euro Yen next, unfortunately, I have to say it's kind of the same approach again. We'll work with the 128.93 to the downside, but we will work with a very, very marginal new high in this market, 131.80, meaning if we get a confirmed break above that level, we're only talking about 11 pips, so it's almost negligible. But if you get a confirmed break above these, as you can see, this is not a confirmed break. There is clear resistance preventing prices from pushing higher, in this instance over the last week in the Euro Yen. So these are all the things to give some consideration to. So as you can see, this is probably going to be a slightly quicker weekly trade plan than normal. I had a little bit of a bounce off the 86.86. No major surprise there. Let's zoom out and see what what the conditions are. It's kind of a slightly downward sloping descending triangle, so there's a bit of downward price pressure pushing prices lower, potentially looking to strengthen the pound, but you're getting buyers coming in around this sort of level down here and pushing prices higher. So that's what we take note of as technical traders. So if we switch to the weekly chart, what you will see here is a very marginal new low that we'll work with, which is the 86.87. So 86.87, I think I said. No, sorry, I must have taken down the wrong low. Yeah, sorry, the 86.67. 86.67. Okay, so those are the levels, and we're happy to work with that for the time being. Now, the stock markets have been in an interesting phase. As you can see, bit of bullish price action, bit of negative, currently relatively sideways, so nothing of any huge interest really. If I zoom out, so that's the overall position, a little bit on the messy side, I'm sure you'll agree. We'll still work with the 25.86 to the downside, and I think it is the 27.55 to the upside. So this market has lots more work to do in order to sort of, allow us to potentially start even navigating either to the upside or to the downside. So just a messy picture overall. I'm sorry to say the same picture applies almost across the board. So this is the Dow Jones. So the 23.495 to the downside, and we're going to continue to work with the 24.989 to the upside. So it's just a wait and see, be very patient. That's why one of the principles of our approach is based on patience, because there's lots of traders jumping in and out of these very choppy, sideways moving markets, and that's when you can really see, large percentages of your trading account, being eaten into. So prevent yourself from that pain or discomfort, and just apply patience. So we can't recommend that enough. Again, bit of selling price action, bit of buying, nothing really of any significance. Although when we look at the weekly, we have retraced, probably 70% of the bearish price action from the week before. So that is quite interesting. But we're now trading above the previous original low. So, but just very, very messy, unfortunately. So we're going to continue to work with the 70.67 to the upside and the 67.65 to the downside in the FTSE. And to just finish off the global indices, the US tech index has obviously just peaked a little bit lower. So we are below this sort of reversal, which ordinarily would be a little bit more bearish than that, but we can see what's been happening with the other indices. So there's a bit of supported price on a weekly time frame, a very, very large long-legged doji candlestick, which is just more indecision really as far as we're concerned. So could be pushing higher, could be up at new highs within a week or two, could be down below the 6,000 level. So it's really like that for the time being. So again, for consistency purposes, we work with a new low of the 64.20. So we work with this 64.20.75, I think it was. So we work with that just for consistency purposes. Yeah, what I'm going to do is work with this high as well. It's the 68.48. So 68.48, I think it was 0.5. So we'll work with that level. So really, there was no need to leave it there, because if you get a break of that, you're likely to be pushing new highs. But in actual fact, you might get that little move a little bit earlier. So we work with that lower level. Okay, so that's the global indices. Moving on to the few commodity markets we like to look at. And again, we have quite a large range, and you can see what's happened. We're currently selling the gold off this little break here, and we're currently breaking even on it. So we do want that to continue to squeeze lower. On a weekly candlestick, you can see we're trading in this range. Not that it's a major problem for us to do so, but we would expect at least continuation next week in the gold market to the downside. We don't expect it to necessarily break these levels and kick on to the downside. We're looking to capture a move down to these lower levels. So that's the idea behind the trade. And we would expect, looking at this candlestick, we've got a triple top now. We would expect continuation pushing lower. So as far as the levels are concerned, we're quite happy to work with the high of the 1365 to the upside on a weekly chart and the 1302 to the downside. So that is a very brief roundup of the gold market. The crude oil, we currently have an entry order sitting just above these previous highs. It's a double top effectively. So if we get a break of this, we're not surprised to get a little bit of positive momentum coming in. We wouldn't be interested in getting into this side of Easter. Early next week, it might be a different situation to see if we get this prices pushing higher. But on a weekly time frame, 66.63 to the upside. Now, I think it's actually possible that we can start to work with a new low in this case, which is the 63.71. So I haven't done this for a while on the gold market. So I think it was 63.1, unless I'm mistaken. Yes, I was marginally. So the low, 63.71. So I'll just change that to be as accurate as we possibly can. 71. So we still work with these highs, but we do have new lows. It is within kind of an uptrend, clearly defined. So if you did sell it below that level or around that level, it'd be a counter trend move. Okay, and just to finish off with the 10-year note, you can see this little bit of a pushback, breaking off those levels. Does it mean that an opportunity to sell it no longer exists? Not really, because yes, technically we're getting a little bit of a structural failure or multiple of them. But what would be ideal for us is this market to come back to the 122. Excuse me. And you can see the reasons why, because we're looking at these levels over here. So that's what we're looking to see happen. Get this little move from this level up to there. The likelihood of that happening is probably not that great. So if we got a turnaround and a clearly defined opportunity to sell it, even at a slightly higher price than where things currently are, then we'd probably accept that. We are looking for opportunities to continue to sell the 10-year note. So it won't just be a one-hit wonder to the downside. It might be a construct of a number of potential sell trades. So it's just having that directional bias. We know we want to sell this market, and then it's just about timing and waiting for those opportunities to present themselves. Occasionally, we might have to take one or two small losses to be able to capture that winner, but we will be. That is our trade idea, unless something significant changes. And just before I finish, to just let you know that the with the changing of the future contracts, the prices gapped lower, and you can see a very clearly defined reversal of that gap. So that's quite interesting from a technical perspective. And again, we'll see what's going on elsewhere with other markets and asset classes, and see if there's a potential to maybe sell this market around these sorts of prices. So tune into the live trade room for that. So on that note, we're quite happy to wrap this particular webinar up a little bit earlier, perhaps than usual. So feel free to follow us on Facebook, Twitter, and LinkedIn. The details are there up on screen. And if you do have any questions, of course, that may be the case, you're very welcome to email us, because this is now a pre-recorded webinar. You're very welcome to email us at the support at TheLiveTradeRoom.com, and myself or one of my colleagues will be more than happy to get back to you and give you perhaps a little bit more support if that is so needed. So all that's left for me to do really is to wish you all a very happy Easter long weekend break. Hope you do enjoy it with your friends and family, and we will have the live trade room on Monday as normal, Monday evening, in preparation for what we regard as more liquid markets, perhaps on Tuesday. We wouldn't be anticipating any significant liquidity on Monday for any particular reason, being a bank holiday Monday, or Easter Monday, should I say. So on that note, thank you very much indeed for joining us. Do take care, have a great Easter, and we look forward to seeing you next week. For everyone here, take care. Bye for now.